Hi everyone, good morning. My name is Andersina Sudan and Ikal. Today, me and my fellow friends will present about Cahaya Mata Sarawak Financial Performance Analysis. As we know, Cahaya Mata Sarawak Berhad founded in 1974. The short form for Cahaya Mata Sarawak Berhad is CMSB. CMSB has evolved from a single product firm into its Malaysian's leading infrastructure conglomerate. It acts as the primary infrastructure facilitator, encouraging regional connectivity and industrial development in Sarawak. The group's structural strength lies in its synchronized layout of pure-play operational division, optimizing resource allocation and capital efficiency across macroeconomic cycle. For the core operation, it was included cement, which is sole integrated producer in Sarawak. Then the roads, maintaining 6,000 km plus network. The third one is construction. It is heavy engineering and utilities. The fourth is property, which is sustainable township and development. And the fifth, trading, strategic materials and logistics. Last but not least, postpaid. It is industrial side diversification.
Hi everyone, I'm Regina. So let's look into trend analysis of the revenue trend. So same as Berhad, revenue increased from 814.55 million in 2021 to a peak of 1.2 billion in 2023, demonstrating strong business growth during this period. So revenue then remained relatively stable in 2024 before declining slightly to 1.1 billion in 2025. Despite this decrease, the overall revenue trend remained positive, with revenue growing by approximately 36% over the 5-year period. This indicates that the company successfully expanded its operations and maintained a strong revenue base. Moving on, let's examine CMS Berhad's profit before tax or PBT trend. PBT increased significantly from 234.60 million in year 2021 to 397.99 million in year 2022, representing the highest level achieved during the 5-year period. However, profitability declined sharply to 128.24 million in 2023. Although PBT recovered slightly to 190.10 million in 2024, it fell again to 108.80 million in year 2025, which was the lowest level recorded. This trend suggests that despite maintaining relatively strong revenue, same as Berhad faced increasing challenges in controlling costs and sustaining profitability. Overall, the company's profitability peaked in year 2022, but showed a declining trend in the subsequent year. So moving to the next slide. Moving on to the gross profit trend, same as Berhad recorded consistent growth in gross profit from 145.26 million in 2021 to 188.48 million in year 2022, before increasing further to 280.56 million in year 2023. Gross profit continued to improve and reach its highest level of 333.03 million in year 2024. However, it declined slightly to 309.49 million in year 2025. Despite this decrease, the overall trend remained positive, with gross profit increasing by approximately 113% over the 5-year period. This suggests that same as Berhad was able to enhance its operational performance and generate stronger earnings from its core business activity. Overall, the company's long-term growth in gross profit reflects improved operational efficiency and business performance. Next. Now let's examine the trend in total expenses. Same as Berhad, total expenses increased from 148.55 million in year 2021 to 170.99 million in year 2022. A significant rise was recorded in year 2023, with expenses increasing to 279.80 million, although expenses declined slightly to 249.34 million in 2024. They increased again to 297.98 million in year 2025, marking the highest level during the 5-year period. Overall, total expenses nearly doubled from 2021 to 2025. This upward trend suggests that the company faced increasing operating and administrative costs, which placed greater pressure on profitability. As a result, the rapid growth in expenses became a key challenge for CMS Berhad and contributed to the decline in profit performance in the later year. So next, finally, let's examine the net profit trend. Same as Berhad, net profit increased from 204.74 million in year 2021 to 289.92 million in year 2022, which was the highest level achieved during the 5-year period. However, net profit declined significantly to 81.63 million in year 2023. Although the company recorded a slight recovery to 124.92 million in 2024, net profit fell sharply again to 39.71 million in 2025, marking the lowest level during the period. This declining trend suggests that the company faced increasing challenges in sustaining its profitability despite maintaining relatively strong revenue and gross profit. The deterioration in earnings was largely influenced by rising expenses and weaker overall profit performance after 2022. Overall, while same as Berhad remained profitable throughout the period, its earnings became more volatile and weakened considerably by 2025. So, conclusions next.
Hello everyone, my name is Carolina Manggang. Next, I will talk about the financial ratio analysis that we have conducted on CMS Berhad from 2021 until 2025. So, let's look at the liquidity ratios, which is all about the company's ability to pay off their short-term debts. The current ratio increased from 1.43 in 2021 up to 2.02 in 2023, before declining slightly to 1.66 in 2025. However, the ratio stayed above 1.0, meaning they have enough assets that can be converted to cash to pay off the current liability. Similarly, the asset test ratio improved from 1.07 in 2021 to 1.49 in 2022, then gradually decreased to 1.27 in 2025. Still, the ratio is above 1.0, which is considered healthy. Although the net working capital peaked at 1.01 billion in 2022, it declined in the following years to 551.45 million in 2025. Overall, these results indicate that CMS Berhad remain capable of meeting their short-term obligations despite the gradual decline after 2022. Next are the leverage ratios, which is about how much debt or financial risk the company is willing to take in order to fund their long-term growth. Both the debt ratio and debt-to-equity ratio showed that it declined over the 5 years. The debt ratio decreased from 0.33 in 2021 to 0.2 in 2024, before rising slightly to 0.22 in 2025. Likewise, the debt-to-equity ratio fell from 0.48 to 0.25, with a small increase to 0.29 in 2025. This overall trend suggests that CMS Berhad became less dependent on debt financing and preferred equity financing to strengthen their capital structure over time. Their financials are lower, however, it also could mean they are conservative, that it could actually hinder their potential growth. Moving on to the activity ratios, the inventory turnover ratio increased steadily from 1.47 in 2021 to 2.26 in 2025, indicating improved inventory management and faster inventory movement. Meanwhile, the total asset turnover ratio rose from 0.17 to 0.26 between 2021 and 2024, before declining slightly to 0.24 in 2025. Overall, these ratios suggest that the company improved the operational efficiency in utilizing inventory and assets to generate sales. Lastly, let's discuss the profitability ratio. The gross profit margin showed a consistent improvement, increasing from 17.83% in 2021 to 27.9% in 2025, indicating better control over direct production costs. However, the other profitability ratios were more volatile. The operating profit margin reached its highest level of 41.16% in 2022 before declining sharply to 12.74% in 2023 and ending at 10.41% in 2025. Similarly, the net profit margin peaked at 28.69% in 2022, but fell significantly to 3.58% in 2025. The operating ratio remains relatively stable, fluctuating between 0.87 and 0.92, suggesting consistent management of operating costs relative to sales. Finally, both return on equity and return on assets followed a declining trend after 2022. ROE decreased from 8.34% in 2022 to 1.1% in 2025, while ROA declined from 5.97% to 0.86%. These results indicate that although CMS Berhad improved the gross profitability, their ability to generate operating profit, net profit, and returns from shareholders' equity and assets weakened during the latter years. So, in conclusion, CMS Berhad demonstrated strong liquidity, lower financial leverage, and improved operational efficiency between 2021 and 2025. However, despite the improvement in gross profit margin, the decline in operating and net profitability, together with lower ROA and ROE after 2022, suggests that the company faced challenges in converting their revenue into overall profits and delivering returns to shareholders. Thank you.
Hi, I'm Hani. I'm going to present about horizontal analysis statement of financial position as at 31st December 2021 until 2025. First of all is asset. Current asset increased by 16.56% in 2022 due to significant growth in cash balance and inventories. It declined from 2023 to 2024 as investment in securities were disposed and property development costs reduced substantially. Non-current asset became the main asset component, increasing steadily from 2023 onward. As for the PPE increased by 11.05%, it indicating continued investment in operational capacity. Next is liability. Current liability short-term borrowing decreased by 77.1% over 5 years. Trade and other payable remain the largest current liability. And overall, total liability declined from 1.57 billion to 1.04 billion.
Hi, so I'm Halimatul Satya, the next presenter for today. So I will present to you about horizontal analysis statement of profit and loss from 2021 till 2025. Overall, we can see that the total revenue increased since 2021 till 2025 over the years, which means the company was able to generate more income, higher sales. However, the improvement in revenue did not fully translate into stronger profit. Although gross profit improved in some years, the company also faced higher operating expenses and weak non-core income, which reduced the overall profit performance. So next, we see as a result from this table, profit before tax and profit after tax show a weaker trend compared to revenue trend. This indicates the company, which is, as we know, Cahaya Mata Berhad, Cahaya Mata Sarawak Berhad, may have an issue in controlling and
Moving on to vertical analysis of SOFP. As for the asset, total current asset decreased from 36.6% in 2021 to 29.84% in 2025. Total non-current asset increased from 63.94% to 70.14%. It indicates a shift toward a more asset-intensive structure as the company is allocating more resources to long-term investment and operating assets. Total liability decreased from 32.63% in 2021 to 22.47% in 2025. It's driven mainly by reducing in borrowings. For total equity increased from 67.37% in 2021 to 77.53% in 2025. To interpret this analysis, companies show a shift toward a stronger equity finance balance sheet to improve liquidity position, reduce financial leverage and borrowing dependence, and increase return profitability and financial stability. So, CMSB is more financially stable in 2025 compared to 2021.
So next, this slide shows the vertical analysis of the statement of profit and loss. So from the analysis, total revenue is used as 100% for each year. The company of cost of goods sold decreased from 82% in 2021 to 72% in 2025, which helped improve the gross profit margin from 70.84% to 27.90%. However, the company's selling, general and administrative expenses increased over the years from 9.60% to 23.70%. This reduced the benefit gained from higher gross profit. The company, which is Cahaya Mata Sarawak Berhad, record its strongest performance in 2022, mainly due to high finance incomes. However, profit became unstable after that, which losses in 2023 and 2025. Overall, the company improved its gross profit margin, but rising operating expenses and unstable income weakened its final profitability. That's all for vertical analysis statement of profit and loss.
Okay, next is economic conditions and industry impact to CMS. So I'm Halimatul Sazdia. I will continue this presentation. For this part, I will explain the economic condition and industry impact on CMSB. CMSB's performance is strongly connected to Sarawak economic environments, which is especially government spending and construction activities. Strong infrastructures development such as highways, bridge, ports, and industrial parks creates higher demand for cement, construction materials, and road maintenance services. This is, we can see, government support through initiatives like SCORE and urban expansions also helps the constructions and property sectors growth in the long term. However, CMSB also face some risks if the economy is going slow down. Construction projects may be delayed or will be reduced. At the same time, inflation's higher fuel and energy prices, raw material costs, and interest rates can increase expenses and reduce profit margin. And next is industry opportunities. In terms of industry opportunities, Sarawak construction sector is still growing.
which supports steady demand for CMCB's products and service. Besides cements, we can see CMCB has also diversified into other areas such as phosphate, oil tools, telecommunication infrastructures, environmental technologies, and property development. This helps reduce the company's dependence on only one industry. So that the phosphate business is also important because it has the potential to become a long-term growth driver for CMSB. Overall, government investment and industrial expansions support CMSB's revenue growth, while rising costs, competition, and economic uncertainty may pressure its profit. However, CMSB diversifications help strengthen its stability and future growth. That's all. Thank you.
Next is challenges in operating business. For challenging in operating business, first is margin sustainability. For margin sustainability, rising raw material inputs, global energy price spikes, and escalating logistic expenditure are compressing net operating profit margin. Operating ratio show upwards pressure as operating costs consume significant top-line revenue. Second one is asset usage efficiency. Total asset turnover is impacted by long-term capex and complex industrial expansion, notably the postpaid venture. Underutilization of infrastructure plans during uncertain time limits long-term profitability and return. Third one is debts and financial pressure. Structural reliance on debt financing for capital-intensive segment increase exposure to the regional borrowing costs. High debt-to-equity ratio elevate financial risk during economic downturns and interest rate fluctuation. For the fourth is external force. It is supply chain disruption, unpredictable buyer demand, and severe monsoon or weather impact disrupt construction timelines. Regulatory oversight and international volatility require constant strategic modification. Next is financial market and economic development. For this situation, first is industrial and employment. For industrial and employment, CMSB anchor the regional value chain as the primary infrastructure facilitator for public transport and energy grids. Like thousands of direct jobs in manufacturing and logistics, stimulated local content for supplier and contractor, and continuous investment in technical workforce training. Second one is ESG and sustainability. For this, focus on Green Building Index, which is GBI, compliance and energy efficient clinker operations to align with national SDGs. It is extract global institution and ESG focused investor. Second one, stabilize governments and FX risk framework and strategic adoption of green RE standard. For the third is real estate and urbanization. This one is high impact project like BCCK and Samalaju Industrial Park. Utilities drive modern urban connectivity. It's like increased local land value and retail commerce hub. It also transformation of undeveloped parcel into hub. And then it's strengthen real estate investor confidence. So now we come out on conclusion. First, strategic alignment. CMSB performs performance is closely tied to Sarawak economic growth and infrastructure spending. And then for resilient metric, it is diversification improve resilience, but profitability remains sensitive to cost, competition, and economic cycle. For the future outlook, anchored by industrial dominance and state-level fiscal mandates, CMSB is well positioned for the next growth cycle. That's all from our group, and thank you for boring your ear to listen to our presentation. Thank you.